and welcome to today's video, which is called I Warned You. Plain and simple, I warned you about economic data, and that's exactly what we got. Jolts down, ISM manufacturing data, not encouraging activity, but prices through the roof. I'll be linking again to Saturday's extensive video where I called job market projections, and remember that I mentioned challenger job cuts right there as my preferred survey. And that's exactly what is pointing at tough economic data coming Friday, and we will get a little preview with the employment change today, which is Wednesday. I'm recording this around 2 hours before the opening bell. So this is the daily chart, S&P 500. We saw stocks duly dive on stagflationary data. However, is this the same kind of a reaction that was present when University of Michigan data arrived, which started all that thing with S&P 500 briefly peaking for over 24 hours above 200-day moving average? It remains to be seen, and right now I will dive further into the technicals, charts, data, and individual stocks. This is the sectoral view. It had been reasonably risk-on yesterday. Discretionaries have been, of course, driven primarily by Tesla, and I will be linking to prior week's Thursday, second video of Thursday, that I had been covering Tesla extensively, and we had seen the stock rip. Tech. Did it perform? Did it not? CoreWeave sharply reversed to the upside. Nvidia, nothing to write home about, but still a rally. So the signs in there are pointing towards some kind of an improvement, and you may remember yesterday's video, to which I will be linking as well, because all these videos are connected to each other. There had been a bout of tech outperformance. However, poor data knocked indices down, and then some kind of a return towards the highs had developed. One look at financials, the leading sector. Is it rallying? Is it not? But for sure it is not breaking down. Capital markets, KCE, are not looking too bad either. JP Morgan, Goldman Sachs, as well, reasonably good and not breaking down charts. So this is something that says that it's not yet bearish time. However, we have tariff days and we have job market data, and the figures that I have described in detail, my projections for this week's non-farm payrolls, they do not add up exactly. So I wonder how they will come up with the little bit maybe leaning rosy, because those government job cuts instead of hiring are going to be weighing down. So let's see the way, the mechanic, in which they would be counted. Bond market. Yesterday, it has not been looking all that great for junk corporate bonds. However, they had, for all the suspicious candle shape, they had defended, the buyers have defended successfully, and quality bonds had gone up. What this says is what the next chart will confirm. The bond market is reasonably complacent. Is it a good sign? Is it a bad sign? Well, it remains to be seen, because it's certainly looking the way that bond market favors not too steep, a move to the downside in equities. However, bonds, in my view, are underestimating the risk, which will be apparent from the following charts, which are the volatility charts. And I favor more time in equities going relatively nowhere, being rejected on the upside, being rejected on the downside, all within a context of still unappealing market breadth. Because remember, the very first chart that I showed you today is showing that the percentage of stocks trading above the 200-day or 50-day moving average is still well below 50. So I do treat this as an oversold bounce. However, for now, VIX had been hammered down. Will it stay that way? Can it? If you look at my preferred volatility ratio for the stock market, VIX to short-term VIX, this is not yet showing signs of clearly rolling over towards the downside. Because remember, we have tariffs, we got data, they were not brightly looking, and the non-farm payrolls bring and confirm what stocks are facing for quite some time, and that is significant downside risks, which are greater than the upside risks. However, that's the nature of the market, that those short squeezes can be fast and steeper pinching, and this is exactly what we had seen, and in my view, stocks are in the process of rolling over to the downside. However, it will take some time to develop and needs really pinching liberation day, which is today. So let's get ready, and the same goes for the job market data, tomorrow unemployment claims, and then the big headline, non-farm payrolls. My join page will help you select what's right for you based on what and how you trade. Combine the daily analytics with the intraday premium Telegram channels.